Mr. Dustin Garrow, how are you, sir?
Doing well, Matt. How are you?
We are. Yeah, I know. It's been. Well, I'm trying to say it hasn't really been that eventful out there since I last saw you. What are the big things that have happened? Almaty last week. I want to talk to you about. Uranium's come off quite a bit, recovered somewhat to about $90 today.
Yep.
But that's about it. That's about it, isn't it?
Well, there's a few more things we could touch base on. So,
good. Good. Well, look, let's talk about maybe Almaty last week. I know you didn't get to make it for numerous reasons, but what did you hear? What was the conversation?
Well, the feedback is starting to come out. Some of the industry newsletters are publishing summaries. Reasonably well attended. There was a big concern that because of the location, it might be off, but a couple of hundred participants. And the main theme was industry collaboration. In other words, it kind of came up at the WNA in September that, well, with these issues we see, market bifurcation, the need for more Western supply, the utilities, the producers, the price reporters, the traders, everyone kind of has to work together to keep nuclear moving forward. And I think that was part of the theme. And I think a greater, not realization, but more discussion of where's the supply going to come from. Again, the conference, the World Nuclear Fuel Cycle, was sponsored by World Nuclear Association and Nuclear Energy Institute. So it's a joint sponsorship. They've not been too focused on the future supply issue. It came up in London finally, and a bit in Charlotte last October. But I think that, reading the summaries of the presentations, we really have to kind of jointly move forward. And I know there was a keynote address by executive from Kazatomprom. And he said, well, if things don't improve, which he even brought up the term price, which we can talk about in a minute, there could be shortages. And so that wasn't something that those two organizations kind of, wanted to focus on, because it brought into question, the nuclear option. In other words, if we build reactors, if nuclear's got this, we're going to double, triple, the fuel will come. Apparently, they also got some discussions of advanced reactor fuel. Where is HALEU going to come from? And apparently, there are some of the advanced reactor group that want, let's call it unique fuel, purified UF4 and all kinds of stuff. And so that is starting to come to the surface, that it's not available. Not that it won't be at some point, but, it's going to take quite a while. So the point is, not to get off on it, but the SMRs that use conventional fuel will have a leg up. Westinghouse, Rolls-Royce, I think NuScale. So the point is the fuel side is starting to be discussed more and more, and it includes uranium. Will there be enough material to power these reactors, or SMRs in the future? And how does that interact with, commercialization and timing and things like that? So again, I think the gathering was probably pretty good. Was a little more, let's say, down to earth, rather than London, which tends to be bigger policy issues. So we'll see if it gets the industry moving forward together. So,
well, I think this kind of collaborative approach is definitely required. And I think people, a good job has been done in the last, 3-4 even 5 years to sort of raise awareness of some of the issues coming down the line. I think obviously, I've kind of got an investor leaning on this. I'm more interested in like, will the companies I'm invested in be the beneficiaries of it? But let's start with things like the WNA and obviously the get together in Almaty. It's with the groups who are much further downstream, in terms of processing, in terms of building SMRs, in terms of actually feeding in and delivering the energy requirements of the various governments who, I think there were some government attendees there, so they were a little bit in London in September. So they are the main beneficiaries of the money and the PR and the exposure. What about these poor little uranium potential suppliers that we talk about every week? Guys like even Kazakhstan fall into that category. How do they feel about this? I mean, you said they're suggesting we need higher prices. Our costs have gone up. We need higher prices. Is anyone listening? Where are the utilities? Well,
if you look at the data for last year, which UX published their summary of term contracting, I've been told by some that they've been very surprised at the volume in Europe. Okay, because the utilities are moving more quickly towards securing longer-term fuel supply than what we're seeing in the U.S. I mean, the U.S. utilities apparently only contracted for like 20, maybe 25 million pounds last year for future delivery. So it's like 6 months, 7 months of consumption. So it's really not on that replacement track that a lot of people talk about. And we've gone through all the reasons why. Some of it is the Russian deliveries, which, we had a ship held up in the German port because it had Russian plywood as ballast. And it finally, I guess, got released. We've had the disaster at the port of Baltimore, where those shipments were going in. Now they'll go into Philadelphia. But how backed up will Philadelphia get when Baltimore is closed? Anyway, the utilities are still, I think, having to take into account deliveries of Russian-sourced uranium. We've got the sanction legislation, which, as you know, passed the House of Representatives. Then Senator Cruz of Texas kind of held it up, let's say, in the Senate. And the latest rumor that's going around is the Biden administration will append that to the Federal Aviation Administration budget authorization bill that's supposed to be voted on mid-May. So, we could still see those sanctions show up reasonably soon. Well, then the utilities are going to have to step back and say, am I going to get waivers? What am I going to do here? So again, I think, but they've been cautious, particularly as the term price has gone up. I mean, it ended last year 68, give or take. It's now, by the end of March, was 75 based on UX, or 80 is what Trade Tech has. So what is, I think, happened, which wasn't a total surprise, is the term offers with 7 in front of them cleared the market very quickly. There weren't very many suppliers willing to commit long term in the 70s. So now let's say we're in the 80s. And I think the utilities are saying, floors I keep hearing are 75 to 80. Ceilings are 120 to 130, and pressure is up on those. So I think they're in discussions. They want to understand alternatives that might be available out there, but you don't see the level of commitments yet that will move, not restart projects, but greenfield developments, which you really need to have by later in this decade. I mean, we're already moving toward the middle of 2024. So things have to start happening fairly soon for production in 27 or 28.
But it's like a slow moving, train crash, right? Everyone can see it. Everyone accepts that it's going to happen. There's the charts of UXC, trade tech, the lines cross soon, and we're not doing anything about it. So therein lies an opportunity for investors. Very exciting for those uranium companies that can tell a good story, either by producing and selling and getting term contracts in place, or being a developer, which is slightly appealing to a sovereign state. We'll talk about that in a bit, or be able to demonstrate that you've got something of scale that may have some value further down the line. But it's so bitty. This sector is kind of going to deliver the energy requirements for a lot of sovereign states, and we're not getting our act together. And we're kind of hearing the same stories. We've been talking about some of the same geopolitical drivers for 5 years. We are seeing some money being made available, which is great. We're seeing some small amounts of production. I mean, it sounds exciting, but it's not a lot. It's a pimple of production. Somebody's got to give here. And what does that do to uranium price? And what does that do for uranium equities?
Well, a couple of comments. When you said the crossover will have to happen soon, it depends, as we've talked in the past, how you see demand. If you see just modest demand, show me where the orders are for more reactors, the SMRs, it tells you one story. Others show already we're in a deficit. The utilities are drawing down inventory. There's really no material much in the spot market. As an interesting observation, I talked to a fuel director recently at a mid-sized U.S. utility, very informed, probably one of the best in the business. And the comment was how surprised they were at how slow the industry kind of accepts trends. In other words, kind of, a lot of them are nuclear engineers, and it's like, show me the data, show me where the market is really responding. Well, as you said, the spot price probably overcooked a little bit late last year, dropped back for reasons everyone's pretty much aware of, which again showed the trading company offering of small volume, dropping the price $7, shows a lot of volatility. That comes with thin markets. Now it's recovered kind of back to 90, so that's noticeably up still. And again, the term price in that, let's use 80 on the optimistic side. Keep in mind, in the middle of 21, the term price was 35. So it's doubled. But back and say, well, no one has announced a new greenfield development. But I think it's the observation that the industry is reluctant to acknowledge or accept some trends. So that's where we are. But, the day will, how many times have we said it? We're closer to the day now than we have been, where all of a sudden that term price is 85 or 90 or 95, 100, because there just isn't the number of projects out there to satisfy the demand. The fact that the SMR group is now starting to look at fuel, that's a huge plus. The U.S. utilities, I think we'll see a lot more term contracting this year, more than 20 or 25 million pounds. That's going to force the price up. So, that's it's going to be, certainly the term price is more gradual than spot. It's not, quality is usually not there. So
what I want to talk about is about how little effort is being made to actually trying to get into production. And I'm trying to work out, is it's a psychological thing of, hey, well, we saw price kind of rip at the end of last year. Maybe if I wait, I'll get a much better price on some of these term contracts. Or is it, I don't actually and have never had any intention of building this goddamn thing. There's a phrase I see a lot in banking when I was bouncing around Africa, which when I'm talking about, there people wanting to loan some money, I said, well, what's the end game here? Oh, the Chinese will take us out. That was like, it was like every other conversation. The solution was, oh, the Chinese will take us out. And that was in the oil and gas game. That was in, gold. It was in, multitude of these sort of big projects that we were looking at. And it kind of feels a little bit like that for a lot of companies. Now, I imagine the North American companies are not going to be able to, or have stopped hoping for that because the kibosh has been good on that one, nor Russians. But the African players, it seems, there's very few kind of moving forward at any pace. They want to appear in control of what they're doing. They want to, time the market as opposed to, get on with things. So that whole de-risking thing, waiting for someone to take them out, it kind of feels like there's a little bit of that. Obviously, things going on up in Niger as well don't help, but you've got to look for partners who perhaps, can manage situations, difficult sovereign situations like that. Perhaps they've got deeper pockets and don't care so much like the Chinese. And I think we've said that for the last 3-4 years. Perhaps the Chinese are the natural buyers of African stories. But we'll come back to that. But if I'm looking at the US, very few of these developers are kind of moving forward meaningfully. So what do you buy into? Do you say it's a psychological thing, they're holding out for better prices, or actually we don't have the skill sets necessary to build these things, someone's going to have to come along and help us do that? Where do you sit on that argument?
Well, I think, I'm a confluence of events guy. I usually try to see how many factors are coming to bear, and not necessarily a slam, but let's face it, a lot of the juniors, senior management and the boards, they were brought in and, as caretakers. In other words, kind of keep the project going, do a little bit of work that they weren't going to be moving forward. So we don't have a lot of, let's get this going as soon. For example, Steve Roman at Global. I mean, he came in and said, we want to get this moving, got, some contracts in place, got the mine moving forward. But you don't see that with a number of the other producers. Now, in the U.S., we've got Encore, Uranium Energy, Your Energy, but these are all restarts. So it's simpler to put a bit of capital in rather than here's open prairie in Wyoming, and where are we going to put that first well field? Certainly in the absence of utility support. Are the utilities giving them the kinds of contracts that they need to move forward to hire whatever people they can find to try to get out there and get going? I mean, so again, I think it's a number of factors, but some of it is, it's all new. When you get somebody that goes, oh, now I've got to start building a uranium mine and I'm going to catch a lot of negativity. I mean, there are some projects proposed in areas of the U.S. that, we think the current protests on pro-Hamas are big. There will be the protests on developing mines there. So it's like, well, and part of it is the market's going up. And then they look around and say, well, how many competitors are there that are going to come in, say, in the next 5 years? It's not a long list. So you go, well, yeah, maybe if I wait 6 months, I'm going to get a much better price than hey. So again, I think it's that laundry list of factors. But yeah, you go, well, at some point, somebody's got to do something. And I think we will get there. But it's all those things rolled up into, well, we'll keep moving forward, but not with any necessarily, it's not an aggressive approach. So
it's going to kind of fall over at some point. And when you sort of trying to get things moving at pace from a kind of broken situation, it doesn't.
Yeah,
it's not easy. It's not easy. And I think that the U.S. utilities are playing a dangerous game. It feels like because we talked about the word collaboration at the beginning of this conversation, but when there's money involved, the collaboration needs to the finances need to work equitably across the board for everyone, or perhaps the incentives aren't quite there to be as collaborative as we seemingly need. Because you talk about it as described saying, well, give us some term contracts to be able to raise the money, to be able to hire the people, to be able to try and build this thing and get this thing going. And you think, well, why don't you do that? Because it's going to be conditional. It's like, if you can get into production and if you can produce, we owe you the money. But if you don't, and we probably look at quite a few companies and go, you probably won't, but the money might help you get there, that you'll be able to raise off the back of a contract. Do you know what I mean? It's kind of a little bit of smoke and mirrors and a little bit of a black art, but without the comfort of those term sheets, banks are not going to move forward. Why would you? Why would you? Even with a contract, there's risk involved.
Yeah, keep in mind, as we've talked, this industry now has a history. So it doesn't take Mr. Musk to look back and say, well, you've had periods of price strengthening, but it's been down more than up. So why would this be different unless I'm protected with these term contracts? A couple of comments. One on, let's say, involvement. Apparently that came up at the conference last week. The U.S. government, as you point out, has allocated budget for, HALU and all these kinds of things. Some of the representatives of private industry, including Converdine, said, we don't want the government. In other words, clean up the overregulation so we can move forward, but please kind of get out of the way so we can move forward, so we can progress. So that's one thing. You mentioned the Chinese earlier. There's a rumor now coming to the forefront. I think I mentioned last time that the Chinese were actively out. They were in Australia. They were in Brazil. What have you got? Where is it? What does it cost? How can we get involved? And apparently they're in negotiations in Africa to invest in a development project. So they are out there still looking, particularly as the news out of Kazakhstan is not as positive maybe as they'd like to hear. Because just to touch on the Kazakhs, I keep hearing most of that uplift is Russian and China. That's where it's going to go. So if you're a Western utility, don't think that's going to add to the supply curve that you see. And again, there was an interview with a commercial executive at Kazatomprom just last Friday. And he said, we try to balance our book. China's right next door. Russia's right next door. They need to buy. We need to sell. So it was almost like kind of putting the message out that, we're very interested in working with our neighbors on their uranium needs. So again, it's, all of those things put into place. But you're right, the U.S. utilities, those that have fairly noticeable unfilled requirements, I think they have to proceed with to be careful that they don't get out there and it's like the cupboard is bare until 2032. We could get to that point. So we're moving into a much more challenging and complex market. The other thing too is about collaboration. Let me not get too far afield. Having been in this industry for a very long time, it's been very confidentiality / secrecy oriented. You could never find out what kind of contracts a U.S. utility had for nuclear fuel because they weren't required to report it. Oil, gas, coal, you could find out to the penny what they were paying, and all that. Nuclear was always off the board. So you could never really get any decent information. And that spilled over into the committees at the WNA and the NEI. Very strict, non-compete, worried about the environment, to the point where WNA, some of the bigger companies said, we're not going to participate in the committees because we don't want the EU competition group to come in and say, hey, you're talking this here, we're going to put major sanctions on your company elsewhere. So, and certainly the Russians, the Chinese, the Kazakhs have never been that forthcoming. So to say, well, let's collaborate is tricky.
Yeah, and so when you say, I was, looking at the old, still got it here on my desk, read through it occasionally for just checking things, but even that, it's a kind of filtered report in the sense that there's not the supply information is not exactly what I'd call. I as a banker, I wouldn't be relying on it, as I would give you a good gauge, give you a good sort of sense of things, but given the way that even things like WNA are funded through the companies themselves, they're perhaps not incentivized to be too critical of what some of the company's claims are. And if I was as an investor, as a banker, even quite frankly as a utility wanted to buy this stuff, I want to have a bit more of a certain view of what the actual supply situation could be. I want a genuine sense of what the demand numbers will be, rather than approximations. And I think that's the problem with this space. You hit the nail on the head there. If you allow a kind of opaque industry, it is going to be susceptible to all sorts of slightly wild swings, because people are using kind of, well, let's say the data could be better, right? So look, I'm a strong believer in the demand numbers, in the sense that you can see the kind of movement of governments and the language and the narrative being used there. We can see the amount of builds, we can see the moves by SMR designers and hopefully builders. So you get a sense that I get that the demand is there. What I'm struggling with is, why can't utilities see that it's almost like they believe that all companies will get into production, with a click of a finger, and they'll have all the supply they need. It's not going to be like that. Like any commodity, like any mine that's built, like any plant that's built, people struggle to actually make it work because it's very sort of technical commodity we're talking about here in the shape of uranium. We talked about on multiple occasions the lack of this kind of skill sets necessary to actually maybe get it over the line, and maybe the willingness of current management teams to actually get it there, take it there. They've been talking about it without the pressure of actually having to do anything for the last 10, 12 years. So that, it's hard to find people out. It's only when they have to start doing things that they can be sort of found out. And I kind of feel we're kind of at that point now with far too many companies, and perhaps utilities have maybe kind of drinking the Kool-Aid there in terms of what these companies are saying. I don't know. I'm trying to find reason to make sense of it, but I don't have an answer.
Well,
these are things
just to comment on the WNA market report, you cannot discuss economics.
Yeah.
So, and you say they've got participants that are paying the fees, and so they will come in and say, well, this project, we've told the public that this is like the potential timeline. I think what they do now is they put a factor across the whole supply curve, that it's only going to be 80% of these guys or 90%, but not trying to pick winners and losers do that. But yeah, it's always been a problem, is the lack of cost information that's reliable. And then the industry's been looking at that. How do we, C1, somebody, or whatever, which gold, as you know, is pretty widely reported. Our costs are this. You don't get that in the uranium space at all. So people say, well, they've got, a 43101 and it's this, and they report a C1 of that. But then you have to say, well, what's not in that cost? Because the utilities, they go and they say, you've advertised that at X dollar market price, you're in the high clover, so I'll pay you that. Well, no. That doesn't have this and that and here, a lot of adders to it. So yeah, and that's been a problem in the past. I've had utilities go, wait a minute, your published price or cost is this, and you want this, that you're trying to, manipulate me. Well, no, there's not a solid history of reporting production costs. Let's put it that way. So all of that adds up to where then the utilities step back and they go, wait a minute, maybe if I wait, the market will get better, will come in my favor. We won't have that demand growth. And therefore, I hear all kinds of different logic. Oh, well, the sequestrers will sell their inventories into the market and force the price down, and I'll be back, in a much more favorable market. I think I told you there was one utility in Charlotte. They said, we see no need to pay over $60 ever. And so you go, well, I can't say that won't, prevail, but boy, I wouldn't hold my breath. You've got multi-billion-dollar machines you got to feed eventually. But yeah, so you get that spectrum of, views on, particularly on the uranium side. But conversion. When I was at Converdyne, we were selling at $2.50 a kilogram, and the spot price is $57 now. I think there's a big margin in that if you're a producer, but market's a market. So
market's a market. I think the Russians are having a nice time at the moment. They've doubled their nuclear exports in the last. Well, since 2021, they were like 1.5 billion a year, up to in 2023, just over 3 billion a year. Biggest buyers, United States and France. So,
anyway,
these sanctions should be interesting, as voted through by the House and I think now the Senate as well, right?
Yeah. Well,
yeah.
It's sitting. It's passed the House, the Senate, which may be addressed soon. Then all of a sudden the rules change and we'll see what happens.
Wow. Mm-hmm. Maybe the US was piling in the last 2 years because it knew this was coming, but it's not going to be enough. It's not going to be enough. Can we jump back to kind of Tale of Two Cities at Niger? We've obviously got two groups you know reasonably well there in the shape of Global Atomic. It seems to be business as usual. We're cracking on. We're building. We are showing intent to the Niger government. And then you've got GoVX perhaps struggling a bit, have received a letter from the minister suggesting that if they don't, get this thing built, they're going to lose their license. What do you make of that? Clearly, as soon as you mentioned that sort of Chinese sniffing around, I'm looking to Niger. It's always really been on the cards, but I'm not excluding Namibia or Malawi or anywhere else. But Niger seems pretty problematic at the moment geopolitically. US has been pretty much been asked to remove themselves from conversations. I don't know how those conversations are at the moment. French been told to leave the country, and I guess the Niger interim government, we're going to call them, are standing up for their rights, their economic rights, it seems. Is it going to calm down? Should we make a call on that?
Well, I don't know. There was just the Wall Street Journal reported the other day that the U.S. has finally thrown in the towel and they're negotiating our exit from Niger. And as it was said in the article, apparently one of the State Department spokesperson said, we don't want to be somewhere where we're not wanted.
Jeepers. That's a lot of places.
And then the Russian military instructors show up almost simultaneously. I think it's, as we've talked before, really hard to try to come up with the right answer. As you say, Global Atomic and GoC are in discussions with the Minister of Mines, and they want us to move ahead and maybe up a higher level. The president or whoever he is talking to the Kremlin, which I think will take precedence over the lower level discussions. The country right now is not producing, well, it's hardly producing anything, but it dropped down to 5 million pounds a year with the closure of Cominac. But you're kind of looking forward. What could these new projects do? Not just the two that I mentioned, but Amararan, which is an Orano proposed project. So, Niger could, I think I saw a number that they were looking to be 20, 25 million pounds a year eventually pre-coup. And, is there an agreement struck at the highest levels that the Russians that need uranium come in and say, hey, we're now the guy, and will they allow other Western companies to continue to move forward? I don't know. I mean, it's not like I have some inside information, and I see what, Global Atomic and GoC puts out, and I think it's well-intended. I think they're in discussions, obviously. They want their projects to move forward, but as you know, in this business, geopolitics can take a bigger role. Look at the invasion. Nobody thought that was coming. So we'll just have to, but again, another supply uncertainty. I look at it from a utility standpoint on top of the situation in Kazakhstan. It just is adding on to, well, where are the safe jurisdictions? And there really aren't many. So
there really aren't many at all. And maybe some of these, I've talked many times about the next cabs off the rank. They seem to be in a holding pattern, doing loops around the block. It seems not getting to the destination. It's interesting times. Indeed, but I have to say, I sense the frustration in the market from investors, where obviously, perhaps the run we went on just around Christmas time, New Year's, was a little bit exceptional, and the kind of reset, I think it's a good thing. It reminds us about the vagaries of the market, and reminds us that perhaps it's not all blue sky all of the time.
Yep.
For sure. But
let me mention one thing. Canaccord has got a big investor conference in La Quinta, California, which is Palm Springs, basically, in early May.
Yeah. For
Yellow Cake with Andre Liebenberg. We've been astounded by the number of one-on-ones. Now, I mean, it's a very big number, which is different than last year. So there is investor interest in the uranium story. Let's put it that way. They may all go away going, well, we don't like the story now, or I don't think that'll be the case. So there's still a lot of interest out there.
No, I get it. I think I was meant to speak to John Chimpaglia last night, but he kind of blew me out because he said he was a bit ill. And I'm speaking to him next Tuesday. I mean, he has, last time he was on, a month or so ago, he said, we've seen about, 300 groups of investors, which are not the traditional investors. It's definitely the interest there. But it was it was sort of at a time when the price was on a rip. I think this is slightly more sort of salutary moments, and like I say, I think it's a good thing. I do prefer steady, accretive growth always over these kind of parabolic rises and subsequent falls, because it's unrealistic, and it also suggests that there's some drivers in there which are really not helpful, and games played. And I said to you a few months ago, which was like, I'm looking for actual fundamental drivers. I'm not looking for headlines. I'm not looking for, people arm waving. I want to see these things happen. And for me, it's got to come down to these term contracts. When do we see more of them? Where are they being allocated? What price? These floors and tops that you're talking about. That's going to inform us more, I think, than perhaps where the uranium companies themselves want you to be looking. What I do want from the uranium company is show me how you're moving this thing forward, or at least explain your strategies as to why you're not. I think it's a fair ask.
Reasonable inquiry. Let's put it that way.
Yeah, for sure. Well, I'd like to say it's been a little bit quiet out there, but I've enjoyed this conversation. Is there anything else? Obviously, that's Yellow King. We saw a few weeks ago, Deep Yellow raise a chunk of change as well. So the people who have built or can talk about building projects, that the money seems available to them for sure. Actually, I must give John a call. But yeah, appreciate your time today, Dustin.
Absolutely.
That's been great. We'll see you soon. Okay.
Yeah, the next big conference, is the World Nuclear Fuel Market in June in Atlanta, and that really tends to be the working level management on the fuel side. So that should be a very interesting gathering, which I will be attending.
Good man. A little bit, hopefully, a little bit closer and a little bit warmer.
Yep.
Okay, we'll see you soon.
All right. Thanks a lot, Matt. Bye-bye.